When you're down here, I would say Web 1, we're at the linear part of the acceleration as we're going from mainframe computers and microcomputers to personal computers. And it was nice and created $2 trillion of wealth. But it was flat. The area in the curve was pretty small. Then you get to the knee of the curve, right, which is Web 2, where we go from read only to read write. Now we're having some interaction and some real growth, and you created $5 trillion of wealth. Okay, bigger area under the curve. But now we're going parabolic as that exponential growth really kicks in.
So hi everyone, welcome to this new episode of NEWFORUM. So I'm Sofiane. Today I'm the host for this episode, and I'm very excited to invite Mark, who's visionary when it comes to finance, innovation, and crypto. First part of the conversation will be introducing a bit Mark, and I would like to give you some questions around how you see the current state of the market and how do you see things rolling out for the markets in general and then for crypto. And then we will discuss about all the topics around the interaction between social capital, networks, markets, and how those things are going to work increasingly harmoniously together. So that's kind of the topic for today. So hi, Mark. Thank you so much for joining and for taking the time today.
No, thanks for the invite, and really excited about this conversation. I love the intersection of so many things that I actually have interest in and care about. So appreciate you hosting.
So yeah, I guess my first question would be, let's start like very, very broad. How do you get into crypto from your financial background? Because it's very interesting for us to see, we all come from different horizons, and we kind of all end up like converging in this kind of platform. And so I would love to hear that. And then like, how do you see your kind of life thesis unfolding? Like, what were the things that you saw in the last, decades, and how do you see unfolding? And how do you see like the macro, the future, how things are going to roll out for us in the coming years in this age of very high volatility and uncertainty?
Yeah, look, so lots of good questions in there, and I'll try to keep it in the guardrails and keep it a little short. Although I would say I don't do short well, but the basic answer on crypto is my life's just a series of happy accidents. And I've been lucky in that, over the course of my career, I migrated to a place where I basically got paid to talk to the smartest people in the world about investing and invest in those segments. And one of my favorite segments for investing has been venture capital and technology. And that goes, all the way back to my upbringing. I mean, I grew up the son of a guy who installed big mainframe computers. And if you think about the history of technology, it's what crypto is. It's an evolution of computing power. And you go back to 1954 with the mainframe, and then in 1968, when I was 5 years old with the microchip. And then where I grew up in Seattle, Washington, there was this innovation 14 years later in 1982 about the personal computer. And it's interesting, there's this 14-year tech cycle, and it kind of guided my career as well. So 14 years later, in 1996, I was working at my alma mater at Notre Dame in the endowment office, helping to manage the endowment. We built a portfolio that was heavy in all different assets: stocks, bonds, currencies, commodities, hedge funds, private real estate, and venture capital. And we were out on the West Coast investing in some, today brand names, but back then kind of upstarts, firms like Kleiner Perkins, Caulfield Byers, and Sequoia. And I tell the story. Sequoia put, $5 million in this company called Google. Our share was 500K, and that 500K turned into 200 million. There should be a quad at Notre Dame called the Google Quad. And it hit me that this opportunity to capitalize on these big tech innovations was pretty important. So I spent, the next 14 years looking at the emergence of the internet, and then the mobile net with handheld, little supercomputers that we all carry around. And so now 14 years later, here we are on the verge of 2024, which is the truth net, right? Which is where blockchain technology becomes the operating system for this internet of value. And so how did I get here is, made a lot of investments in tech over the years, made a lot of investments in hedge funds, had a manager who was a macro guy, but was based in Silicon Valley. And he called me 10 years ago, said, hey, come out to San Francisco, I'll buy you dinner. Like, great, I want to have dinner with my friend. And turned out it was Dan Moorhead of Pantera fame. And we sat down for dinner, and he's like, hey, I'm returning all the money and shutting down the fund. I'm like, why would you give back $1 billion, charging 2 and 20? He says, look, I'm gonna spend the rest of my career on Bitcoin and blockchain. And in 2013, I was not running drugs on Silk Road. I was not a cryptography student. Bitcoin, I'd heard of it, but I wasn't hacking it. I wasn't mining it. I wasn't buying pizzas with it. So didn't really know what it was. But when he explained blockchain as infrastructure, basically as an operating system for exchanging value, I'm like, I'm in. Made a lot of money investing in infrastructure. So invested in that fund. It's done really well. It's up like, 16, 17x. Should have put the money in the Bitcoin fund, right? It's up 300x. But I didn't. And it took about a year to kind of look at it and get comfortable with it. And first quarter of 14, I actually wrote to my clients that this really looked interesting. It was an interesting special situation. And I got hate. They're like, we'll fire you. You're an idiot. Don't talk about this magic internet money. Go back and do your job. Now, the funny thing is the price was about $500 at the time. And to be fair, it did fall to 186 by September. But then 8 weeks later, it was 1,000. And, as it was falling to 186, I'm like, maybe they were right. Maybe I missed something. But then when it took back off, I'm like, no, there's something here. And I did more work. And the key to all of this is just doing the work. With any new technology, if you don't do the work, you'll call it a fad. You'll call it, I just saw a picture this morning of an advertisement from the 1800s against electricity. They called it the demon that no one can see. And it was actually a picture of these wires strangling people. Like literally, that was the cartoon. And turns out electricity is a pretty good thing. But back then, there were companies that didn't want you to have electricity. And it's always the incumbents that try to tell you how bad something is. And if you listen to them, right, if you listen to the telephone companies in 1996, they would have told you that the internet was evil and that it needed to be prevented. They actually tried to pass a bill to outlaw the internet, to make it illegal, an illegal form of communication. Thankfully, Al Gore cast a vote that, killed the bill. And no, he didn't invent the internet, but he did help it. And over time, that's what incumbents do. And so here we are on the verge of this next technological innovation where we replace trust with truth, with ledgers, which is an amazing thing. And so the short version, it's already too long, but basically in 15, my son was graduating from college, and there's a famous movie when I was growing up called The Graduate. This kid graduated from college. His uncle says, one word, plastics. So if you went into plastics in the 60s, you made a bunch of money. I said one word to my son, Jack, blockchain. He's wanted to live in California his whole life. I said, go talk to Dan, get a job at Coinbase. It'll be great. So he went out, called me up, said, Dad, I don't know, maybe it's going to be a big deal, maybe not. I'm just going to go to KPMG. Safe, I'm like, you're going to hate it, which he did. 9 months later, he quit. But not that it's not a great firm. It's just the job, auditing is not very much fun. But long story, he did call me up when Coinbase went public and said, all right, fine, Dad, you were right. I'm like, he says, but you're not as smart as you think you are. I'm like, oh, do tell. I told you to work at Coinbase. And he's like, yeah, but you didn't lever up the house and put it all in Bitcoin. I'm like, that is actually accurate. So why didn't I do that? Because I hadn't done the work yet. And so by 2016, 17, I'd done the work. And I kind of fell down the rabbit hole and I had the aha moment, kind of the same aha moment I had when we invested in Google, which at the time our board was like, that's a stupid name. What do you need another search engine for? There are already 20 search engines. We don't need a 21st. But what they didn't understand was they were reinventing tech. They didn't search the whole internet. They created pockets of information that had answers to questions. So every time you ask a question, it sends you to that place. It doesn't search the internet for the answer. It already has the answers. And so that indexation was a breakthrough, and it created, $1 trillion worth of wealth. And so Web 1 created $2 trillion, Web 2 created $5 trillion, and I think Web 3 will create multiples of that, probably 15 or $20 trillion of wealth. And so as I went down the rabbit hole more and more, I became more enamored. And then in 2018, formed Morgan Creek Digital, a subsidiary of my original Morgan Creek Capital. And I've been spending the last 5 years going deeper and deeper in the rabbit hole. And I describe myself now as a late in life venture capitalist. So now I invest in the digital asset ecosystem in what we call the ABCDs of the digital age: AI, blockchain, chips, and data. Anyway, it's a long answer.
That's an amazing answer. Thank you so much. It's to complement what you just said earlier. The word sabotage in French, it's a French word, comes from employees from factories during the Industrial Revolution, during the automation process, who would basically use their the sabot in French is a wooden shoe, and they would use those wooden shoe to break the machines because
my gosh, that's so great. I find it interesting when you see words like sabotage, that literally you can see, right? They're banging on the machine to make it stop working because they're worried they're going to lose their jobs. And you asked about the macro environment. The macro environment we live in is sabotaging our lifestyle. And it has been really since the 1600s in these waves, longer term waves than the 14-year tech cycle, but these long waves of fiat destruction, starting with the Netherlands. What's amazing, I did a trip to Spain and Portugal this year. And I had always told the story of how the Medicis started fractional reserve banking, but they had stole. Picasso said, good artists borrow, great artists steal. But they stole this idea from some monks. But I actually didn't know who the monks were until I went to Portugal and stood on the site of the Templar Knights, who actually invented fractional reserve banking, who were the monks that the Medici stole the idea from. And so Portugal was the most powerful country in the world. It had the world reserve currency. Spain took them over. They had the world reserve currency. France takes them over. They have the world reserve currency. And then the Netherlands, which is about the size of Ohio, somehow defeats the greatest general, well, maybe the second greatest after Alexander the Great, but, he was a pretty good general. How did that happen? Well, because of fiat, right? The Rothschilds created the first central bank, and they printed money out of thin air and bought a bunch of mercenaries, I guess, and they beat France at their own game. And so the Netherlands, about this big, had the world reserve currency. Well, then half the Rothschilds left and went up to the UK, and they set up the Bank of England. They printed more money. They became the most powerful superpower. Then the sun never set on the British Empire. Then, interestingly, in 1913, interesting year, it's when the Fed was created, but in 1913, they invaded Mesopotamia, incurred a bunch of debt. The pound sterling collapsed. The dollar ascended. 31 years later, after the creation of the Fed, the dollar became the world reserve currency, and we became the superpower. And it's interesting. From 1776, when we founded the Republic, to 1913, a dollar. I always ask people, why is it called a dollar? Back to like Saboteur. Why is it called a dollar? Well, the Rijksdollar was the currency in the Netherlands, and we borrowed the idea from the Rothschild family in the Netherlands, and so we called it the dollar. Interesting. So the roots are there. But from 1776 to 1913, a dollar was worth a dollar. There was no such thing as inflation. There were a little price fluctuation around wars where there were supply disruptions, but bottom line, there was no printing of fiat currency out of thin air. A dollar was worth a dollar. Then in 1913, we took a page out of the Bank of England and the Rothschilds Bank, and we created fiat. And we've been going downhill ever since. And so back to the macro, we're in an environment where in the first 244 years of the Republic, America, we printed $10 trillion. It's a lot. That's a long time, right? And then in 18 months after the lockdowns, we printed another $10 trillion. Well, wait a minute. What does that mean? Well, think about it. What it means is the value of the currency just got cut in half. And so everyone's talking about all this inflation there is. Well, there's no inflation. There's currency devaluation. I live in North Carolina. I live in Chapel, North Carolina. Zillow tells me that my house went up 50% in the last 3 years. No, it didn't. It did not grow. It didn't get more efficient. It didn't get better. It actually wore out a little bit, and I had to put money into it. The money got worse. The money got worse. I bought a gallon of gas growing up in Totem Lake and near Seattle for 33 cents. Bought a gallon of gas the other day for a rental car, $5.33. It's the same gallon of gas. It does the same thing inside the engine. Actually, it's a little less good because it has ethanol in it now, but let's take that out. It's the same thing. Gas didn't get better. The money got worse. And so that process of making money worse is why digital assets and particularly Bitcoin are so important. Because you think about it, but you say, well, Bitcoin didn't work. We had all this inflation and Bitcoin didn't work. I'm like, well, let's think about this. If you go back to before the lockdowns in 2020, price of Bitcoin was about $12,000. Today, the price of Bitcoin is about $26,000. Well, wait a second. If we doubled the money supply, the price of Bitcoin should have doubled. It's about what it did. And it didn't do it straight. It had ups and downs and ups and downs, and that's supply and demand. But the short-term price isn't what matters. What matters is the long-term value. But ultimately, Bitcoin didn't get better. One Bitcoin's one Bitcoin. Bitcoin stayed the same. What mattered is the dollar got worse. And this is the interesting thing about digital assets. We think about them not in their own terms. It's like gold, right? A single ounce of gold for 5,000 years. That's a long time, 5,000 years. If you had an ounce of gold, you could buy a fine person's suit, right? From Cleopatra's time to a suit of armor in the Bronze Age to a zoot suit in the 1920s to Savile Row today. 1 ounce of gold will get you a fine person's suit. Okay? It's a perfect store of value. But we don't price gold in gold. We price gold in euros or yen or dollars or pesos or whatever. Or in the old days, francs. So it's this misunderstanding of the way fiat actually works. And I'll give you a great example. In Argentina, right? There's no bear market in Bitcoin. The price is not going down. It's only going up. Why? Well, because we price it in pesos, and Argentinian pesos are collapsing because they have triple-digit inflation, or Venezuela, even worse, right? Quad-digit inflation. Currency's down 99.999%, but Bitcoin would have saved you. Had you converted that fiat into Bitcoin, you'd have the same amount, however many Bitcoin you bought. So that's a really long answer to saying the macro environment today is one of fiat destruction, because as empires age, they get increasingly desperate. Because as empires age, cronyism funnels all the money to the top, and the people at the top buy a lot of assets and they spend money they don't have. And we have these endless wars with no outcome other than enriching, the military industrial complex. And that's great for those people, but it's really bad for everybody else, because everybody else has sold this idea that inflation is somehow good for you. Like, on what planet would it be good for me that over a 30-year period, you steal half my purchasing power from my money? That's what inflation is. A 2% inflation rate takes half your purchasing power every 30 years. That's not a good plan. That is a slow theft of your wealth by the elites. I always do it like this with the all-seeing eye. By the elites, that is structural. And it's been going on for hundreds of years, probably thousands of years. And we can resist. And that's why this evolution of technology, where we went from single entry accounting, right? In the old days, I lent you money. I wrote down on my papyrus, because I'm old, that you owed me money. And then the Medicis came along and said, no, both of you keep a ledger, and you have the little green ledger pads. The problem with a dual entry system is I write down an entry, you write down an entry, and the Medicis are the trusted third party. But it turns out they're corruptible. So I can go to them and say, you know what, I'm going to change my ledger to 200, even though you only owe me 100, but I'll give them half. And so you come back to pay me 100. I say, no, you owe me 2. Like, no, I wrote down 100. And you go to the Medicis. The Medicis are like, you must have written it down wrong, right? Because they're corruptible. They're taking extra 50 cents. And so that corruption has been rampant through the ages. And what a third ledger does is it takes all of that trust industry that's been built up. It's a $7 trillion a year frictional cost to exchange value, and says, we don't need that, because now we have truth. There's a third ledger, independently verified by a distributed ledger system and a decentralized network that no one can control and no one can change, that says we both wrote down 100. There's no debating. I don't have to trust you. You don't have to trust me. We don't have to trust any system or any family. We have truth. Truth is better than trust. And so the biggest macro opportunity, maybe in history, which is a big statement, I know, but I think it's true. Well, there's probably fire and electricity were probably bigger, but this is a pretty big one. That we can actually now exchange value peer-to-peer without intermediaries siphoning off a cut. And that's, you think about that $7 trillion that finances the global trust industry. If we liberate, right? And I use that term intentionally, liberate or libertad. If we liberate that, what happens? It unleashes an unbelievable amount of human creativity. And, the world would be a much better place.
Awesome. Red pill for those who came, late to crypto and who kind of miss that background. That's like the place this is all coming from, because a lot of people come with NFTs and it's fun and we can and I think this is also an interesting use case, but very important that dilution, non-consensual dilution, is a form of theft. That's why agreements between people kind of prevent that, because it's a way to just and crypto is the technology that allows us to rebuild healthier foundations on a macro level. And so, do you see it as like the crisis is a necessary step for people to just, the necessity, the mother of invention, and like having people being pushed towards crypto because of the collapse? Or do you see it like kind of both collapsing first and then crypto being like the
oh boy, that's a great question. That's like, it's like one of the best questions I've ever been asked. So good. So certainly necessity is the mother of invention, right? If you're in Venezuela or Argentina or Turkey, you're being forced into these stores of value. And look, in the old days, it was gold, right? You converted your fiat into gold, and you carried around with you, or you wore it as jewelry. And there are lots of stories of people escaping, really bad situations by, selling their earring or bartering their gold bars. And the problem with money, with fiat, is it gives the artificially constructed lines on a map power, because the governments rule those with different color paper. Like literally, I have green pieces of paper, or actually if I carried money, which I don't, but I could have green pieces of paper. But in China, they have red pieces of paper, and in Israel, they have yellow pieces of paper, and they don't work in those different places. So, somebody drew a line on a map between North and South Sudan, and so it's a different country. I mean, but there are families. I mean, it's just insane. But so necessity definitely creates demand there. But I think your point is really well taken, that no, it's the other majority, right? Because it still, thankfully, is the minority of people who are being really abused by the dictators, right? Because most republics, particularly the Western republics, they're bad, but they're not horrendous. Now, if you're at the bottom, you might feel like they're pretty horrendous, right? Your price of gas is up, price of food's up, all the things that you need cost more, and your money that you earn is worth less because of devaluation. So yeah, I can see how that doesn't feel very good, but it's not as bad as, like I said, Argentina, Venezuela, Turkey, Zimbabwe before. So if you can get out ahead of that necessity moment where you're just desperate to do anything to get out of the fiat as it, hyperinflates, then I think the more orderly transition is superior. And this gets to, kind of the way we came together, in that networks are really interesting, right? And networks are built of people and nodes that come together. But there's asymmetric information, right? Some people have more information than others. Some people have, access to better information from better sources. They have better access just through technology. And so the networks don't always function equally or equivalently. And one of my big challenges overall is this idea of how do we know what to trust? How do we know what to believe? And I think decentralization and decentralized networks help us on that path, so long as they adjust for those information asymmetries or those power asymmetries, and acknowledge that, a person over here may have just better information, better knowledge, better power than a person over here. But for them to actually exchange, freely on a network, you need to, more equalize that information so that one doesn't take advantage of the other. And I think that's why these permanent, immutable, truth-based ledgers are far superior to these trust systems. I have a recurring nightmare. Go to the bank, I punch in my code, and it says 0. Like, how would I prove it's not 0? I don't have a statement. I haven't had a statement in years. It's their word against mine. Who's going to believe me if I say I had $10 million in the bank? They're like, well, the bank says you have 0. So that's who we're going to trust. And so that's a really bad situation. And the other part is when you put your money in the bank, it's no longer your money. It's their money. And yes, you have an IOU, which is good most of the time. But imagine being that person in Cyprus, a decade ago, where you woke up and you had 25 cents on the dollar left because they, took it. So all of these asymmetries, I think, are addressable using distributed technologies. Doesn't mean we will fix them all right away, but we have the opportunity with better tech to address a number of these things.
Amazing. Yes, I think that the next phase for crypto, and I would love to hear your opinion on this one, but what we've been working on for the past 10 years is, on one side, you have consensus about value storage and value transfer. Mm-hmm. So the nodes all have to agree on that deterministic exact match, state of like one Bitcoin started from that wallet, it went to that wallet, and everyone agrees, and it's like clear. This problem is addressed by blockchain. Then you have different types of blockchains and so on, but I kind of have a general trust that we have solved this problem. Now what it creates is a tension that is pushing us towards the other side of things, which is value assessment, meaning our decision layer, our choice-making capabilities is what is under attack. You cannot attack the balance itself, but you can attack the consensual, transfer of funds. And so the scammers, the policymakers, all those like sex scandals and all we are just bombarded with information that tries to drive our decisions and our choices towards, certain direction to the profit of some people who influence that.
Correct.
And so what we are very excited about is the ability to kind of merge together or create a continuum between, so you have like currently each individual is isolated and is vulnerable, because when you are alone making a decision and you cannot have the peers to like kind of help you have this like wisdom of the crowd, you end up, going for that specific token, so all the like fraud and scam and so on, or that specific decision, or that, FTX over there, or that, all those like people. If you have a purely democratic consensus, then it's the lowest common denominator and it's easy. And that's what we have. It's like social media democracy. All those things are so easy to hack because you just hit like the sex, the emotions, like all the things that drive people, the lowest common denominator. What if we could have a weighted mechanism where social capital would come into play, and we would say those people have expertise, and now we will have a consensus between the nodes that is probabilistic, kind of like what Google did with the PageRank algorithm. It's not exact science, like the results of Google, it's not like an exact match, but there is a general trend that it tends to be accurate, it tends to give you the most relevant results. This applied to the discernment of innovation, because innovation is very difficult to discern. Everyone is claiming to be, the best, and there is this information asymmetry. And so how do we do? Do we federate our, destinies? Because it's not just money; it's also about where you decide to invest your time, what you decide to learn. Speculation is a very broad term. It's not just speculation of money, but it's like making choices that are going to impact your life. And do we delegate this to institutions like academia, or like Morgan Creek, or Vanguard and so on, and or do we find a kind of like middle ground between a reinstitutionalization that is more distributed, more decentralized, more innovative, and more with more mobility, let's say, and the ability to achieve like social consensus and not be alone making decisions, but kind of like having a peer-to-peer mechanism to decide. And so how do you see this concept? Does it resonate with you?
Yeah. So look, again, I think a lot of really important questions embedded there. I use a simple example of rules-based investing. So an ETF, for example. So an ETF that's capitalization weighted, meaning its only rule is it buys stocks based on the market cap of the individual stock relative to the market cap of the market. So let's think about that. So it's not allowed to think, right? A rules-based or an algorithmic system is dumb. And I don't mean unintelligent. I mean dumb as in not able to think. It must do what it's told. And so it must buy more of things as they become more expensive, right? As the price rises, they're becoming more expensive. Now, maybe the company's growing fast enough that it could even become cheaper. But generally speaking, as the price rises, it's becoming more expensive. And there's no discernment as to the relative value versus other things. It's just simplistic, momentum-driven strategy. Now, a momentum-driven strategy actually works well half the time. When liquidity is expanding, momentum's great. When liquidity is contracting, momentum's not great. We saw that in 2022. All those strategies underperformed. So why do we put so much weight on these algorithmic systems? Well, we were taught to trust them. And since we've been in a liquidity providing world for much of the last 2 decades, post QE, it looks like indexing is the only way to do it. And John Bogle told us that before he passed. And so we trusted that. Well, now we have the same thing in other parts of our life. Like, why do we trust social media algorithms? I mean, my favorite example is, okay, so you're served information based on your pattern of liking things, but also on the pattern of other people liking things that the algorithm says are people like you. But here's my problem with that. Some people just like everything, right? Like. That they're just that's how they engage with social media. They're not thinking. They're just, hey, I like that picture. Like, I like what she said. Like, I like this person's politics. Like, okay, other people, I'll put myself in this category. I read it. I may like it, but I just don't get in the habit of pushing the like button very often. Doesn't mean I didn't like it. It's just, I just never got in the habit of hitting the like button. And because one time my daughter forwarded me something and I did like it even by accident. And it was like on a Kardashian. And then suddenly my thing was filled with Kardashians. Like, stop. So now I just don't like anything because I don't want to be fed. So that information that we take as sacred and that we take as perfect isn't, right? It's not getting my real input. And then more importantly, if I happen to like something on nutrition, there's not really much authority there. I'm not a nutrition expert. If I like something related to investment theory, okay, I have some authority there. I've been doing it for 35 years and I might have some knowledge. That probably should be weighted higher in the algorithm. So I feel like all systems have to evolve, all technologies have to evolve, and we're certainly getting better. And the introduction of AI into into these algorithms will certainly enhance them. But I think today things are so simplistic and so rules-based or dumb that we're getting outcomes that are probably unanticipated and in some cases even undesirable. And one of the things I wondered out loud, which is kind of how we met, was like, wouldn't it be great if there were a way for us to essentially rank and or give credit to people with knowledge and expertise who contribute to that knowledge base by emphasizing or liking or reposting or, I can't believe I said post, retweeting. I'm a Twitter guy. I don't like this new thing. So retweet things that are of their domain expertise, as opposed to the person who just puts up everything, even though they don't really have any knowledge or expertise.
Yes, which leads to the question: how do you see the exponential curve that's started? And I think the exponentiality is always like relative, but compared to maybe the 80s to 2000 was exponential compared to the 700s. But now I would say the next 5 to 10 years are going to be like, we will do more progress, probably compared to the last 100 years.
No, that's again, just such an important point. And it's because of the power of exponential growth, right? When you double one, you get two. Okay, that's not very big. And if I just double one over and over and over, 1 to 2, 1 to 2, 1 to 2, okay, that's something. But if I double 2, I got 4. Double 4, I got 8. So that growth rate starts to accelerate up this exponential part of the curve. And I use the simple example all the time, right? Take a piece of paper, and I defy anyone listening to this to fold a piece of paper 8 times. All the macho guys, I can do that, no problem. Can't do it. You can try. You can go for it. You can do it right now, and can't do it. And the crazy thing is, if you could fold it 20, which you can't, but if you could, it'd be as tall as your house. If you could do it 30, again, which you can't, it'd be the atmosphere. 50 is the sun, and 100 is the known universe. So to your point, last 100 years, we made unbelievable progress. Unbelievable progress. We went from horse and buggy, right, ish, to, people in outer space. I mean, absolutely unbelievable progress. But the next 100 years are going to make that 100 years look like we are literally standing still. And just in the next 50 years, this is a crazy number, we will increase 50 quadrillion times. It's a lot of zeros. And it's because we're at the exponential part of the growth curve. When you're down here, I would say Web 1, we're at the linear part of the acceleration as we're going from mainframe computers and microcomputers to personal computers. And it was nice and created $2 trillion of wealth. But it was flat. The area in the curve was pretty small. Then you get to the knee of the curve, right, which is Web 2, where we go from read only to read write. Now we're having some interaction and some real growth, and you create 5 trillion of wealth. Okay, bigger area under the curve. But now we're going parabolic as that exponential growth really kicks in. How big is the number? It's a big number, and the ability to grow on top of better tech. Sir Isaac Newton said, people say, oh, you're such a genius. He says, no, I just stand on the shoulders of giants. And yes, he was a genius, but his genius was elevated and exaggerated by the fact that he was standing on other geniuses who had done work that he could grow on. And I use a simple example of, in the olden days, client server computing was really pretty horrible. I mean, it was better than anything we had before it, but it was not very user-friendly. Networked computers, much better. The web, unbelievable. I mean, it's unbelievable. You and I are talking in real time, high definition, voice over internet protocol. I mean, it's unbelievable. But what we can't even comprehend is what's next. And that is because we're building on top of the internet instead of on top of networks, instead of on top of client server, instead of on top of mainframes. And we've all uttered these words probably in the last, year. How did our parents survive without an iPhone? How did our parents survive without the internet? They managed. The world managed for thousands of years without, technology, but the technology makes things better. And to the point of the guys banging on the machines with their shoes, those machines made life better. People didn't like it at the time because they felt, losing a job was going to make their life worse. But one of my favorite things on jobs is every technology that's ever come has eliminated jobs, right? It just has. But today, there's a crazy stat. We have more jobs than any time in human history. Just full stop, right? There are more jobs today than any time in human history. Amazon, which didn't exist 27 years ago, employs 4.5 million people. Didn't even exist 27 years ago. In fact, here's a crazier stat. In the last 12 months in America, Amazon created more than 100% of the net new jobs. It's pretty cool. And there are jobs that haven't even been defined because the digital age is just starting to reach the knee of that curve where we get, the ability to transact value instantaneously using digital technology, cryptocurrency, digital identity, etc.
Yes, and those technologies will remove a lot of problems, but it will create also whole new classes of problems that need to be solved, and that will need smart people and hardworking people to solve them. And it keeps expanding like a graph, and it's just beautiful.
Well, no. I mean, to that point, look, I mean, one of the things you're working on, which is this idea of, I guess, ranking provenance or authority, which is real, right? Just because a bot can create a lot of data doesn't mean we should consume that data. But there are systems that are we saw this. I got in a little trouble on the internet the other day because I said that there was a time when the bots were causing congestion in the Solana ecosystem, and transactions, I used the word vaporized, which is accurate. What was happening is they weren't actually getting through. So they'd go and then they'd disappear. I wasn't saying that they got on chain and then they were vaporized off the chain. That was not what I was saying. But people got mad at me and I'm like, oh, look, you say it's fixed. Great. I'll trust you. But the bot traffic's down. So as the bot traffic picks back up, are we going to get more outages and more problems? And if I send a transaction, will it go through? I don't know. But just because something can do something doesn't mean it should. And just because someone has an opinion doesn't mean it's a good opinion. And just because somebody likes something doesn't mean it has authority or is really valuable. And so, on the other hand, sometimes people don't share things that are really valuable because no one asked. So we need systems that help ask people to contribute.
Yes, and what's your take on so first, what do you think about market efficiency? Do you think that we are currently in a state of there is almost no more information asymmetry, and that kind of everything is priced? And do you see the risk of people gathering and trying to, and now I'm putting my tinfoil hat on, would gather and trying to jump on like news cycle and massive disruption to seek that market inefficiency, and that that information asymmetry by knowing how things unfold relative to like wars and pandemics and so on? And do you see an opportunity in recreating that asymmetry by tapping into this like exponential, IP markets, like all the creative energy that will, emanate from human ingenuity and all those like new worlds? And I think that you are very well positioned to have a vision on this, considering you have been part of this like, formation of the relationship between finance and technology through like VC firms and so on. And how close can markets get, and how can they coordinate with innovators? Because there is, this desire for funds to get as close as possible to the innovators, but then there is this like discernment gap that is covered by VCs who, some of them like Mark Andreessen, for example, come from like being themselves like technologists. So basically it's like three questions. Are markets efficient? Do you see a risk that the efficiency would lead to the desire to create artificial disruptions? And three, do you see innovation as like the new territory for that asymmetry to be resolved?
Yeah, so I think one, even though I'm a University of Chicago grad, which is the king of market efficiency theories, I don't believe markets are efficient at all. But I think in the way you've defined the question, which is, if we define efficiency as the ability of markets to eradicate a pricing discrepancy created by information asymmetry, they actually are more efficient at that. But I will argue, therefore, they are increasingly inefficient if the definition of efficiency to me is, do they price fair value? And what I mean by that is, with the advent of financial products, manipulation is more rampant than ever. High frequency trading creates massive manipulations. Futures market create massive potential for manipulation. Look at the gold spoofing scandals over the last decade. So I think one of the challenges of the digital age is, as processing power increases and speed increases, and people who can capitalize on these asymmetries at the expense of the little guy or gal, I think makes more inefficient markets, particularly when we have regulators that seem to want to foment that, right? They say, oh, we're protecting the little guy. No, you're actually walling off the garden to keep the rich people super rich and everybody else less rich. But the real issue for me is this creation of asymmetries just to solve them. Kind of like the virus protection software that wrote the viruses. So they released the viruses and then gave you the antidote. I mean, it's like releasing a biological agent and then selling you the antidote. I mean, it's capitalistic, but it's not very ethical. And we've all seen the movie of the guy who was, short the airplane stocks, and then he commits a terrorist act on an airplane, so the stock price goes down. He makes a bunch of money. Okay, definitely can happen, and it's probably happening faster and faster, where you can spread rumor all over the internet and cause prices to move. I mean, not that he would ever do this necessarily, but look at the big CEO of a big public media company who tweeted about a certain cryptocurrency and the price fell. What if that person was short? I'm not saying he was or wasn't. I'm just saying, clearly, given that influence, the opportunity is there. And it gets even exacerbated more by real versus fake. One of the things that it hit me when I was watching the clip, I think it was a David Letterman show before he went off the air, that they had this comedian who was doing an impersonation of Tom Cruise, and then the AI turned his face into Tom Cruise. I'm like, oh my God, I couldn't tell that wasn't Tom Cruise. Sounded just like him, looked just like him, but it wasn't. And so systems that enable us very quickly to ascertain what's real, what's entertainment, what's fake, I think are going to be really important. And now we've got this whole nomenclature of, well, that's misinformation. No, something that disagrees with something is not misinformation. That's just a different view. That's not misinformation. Misinformation is intentional, right, falsities that are propagated to, create a desired outcome. But just because you and I disagree, that's not misinformation. I mean, if I say with my freedom of speech that I don't think the vaccine actually is a vaccine because it's a gene therapy, that's not misinformation. That's just my opinion. I mean, but if you send out information over and over again saying that this, product does this thing that it doesn't really do, that's actually propagated misinformation. So all of those things, I think, can be solved with blockchain technology, because we can know provenance, we can know authority, we can know origin, we can know authenticity. But we need a quick and easy system, not just the blue check mark, which you can buy, and something that can't be faked, right? And now we've got the problem of, can you fake a credential? Well, not on a blockchain, not on a triple entry accounting ledger. But could you spoof like my screen so I think I'm seeing the original blockchain? Now we get into tech that I probably don't even understand.
Yeah, I think that's exactly what I meant a bit earlier when we talked about this decision layer that is under attack. I think that once we have solved, and once blockchain has solved, okay, the data is there, the state is the state, but then it's going to be the psychology, and you touched on it through different angles, from markets to health, to all those topics. Basically, it's the definition of truth and the definition of real and the definition of all those things, and the whole spectrum of potential violations is extremely diverse and combinatorial somehow.
Well, no, let me just get you on that. So let's take a certain car company's stock price. So in the olden days, right? I have white hair, I'm old. You used to value a security based on an analysis of the cash flows of the business. I will argue that the value of that stock is determined by memers and gamblers, right? And cult members. And people take offense to that, but I'm like, well, look, if you haven't done any analysis of the stock to understand the value, but you own it because you like the product, or you like the person, or this other person told you to buy it on some chat group, that's a very different world than the old days of professionals doing security analysis and deciding, you had the long people saying it was undervalued, and you had the short sellers saying it was overvalued, and the market determined. Well, now you got media and influencers and company promoters and pump and dump promoters getting involved, and all facilitated through technology because it can. And that creates a whole nother layer of challenge. And, I look at it, it's challenging for me, right? It's someone who says, well, but based on math, and based on data and based on facts, the price of this asset should be closer to its value. But that and how the markets work today. You look at options activity is up 20-fold, 25-fold since 2 decades ago. What are options? Options are just leveraged bets on underlying securities. Well, if you introduce leverage into a security market, what's going to happen? It's going to exacerbate the swings, positive and negative. So it's all a very interesting dynamic, and it goes to what can happen in any technological innovation. If left unchecked, it will head to extremes.
Yes, and that's where I think the necessity to establish a new form of collective intelligence that is weighted based on skills. And I think we are entering into a world that is like so subjective that we need, people able to like navigate that subjectivity and achieve social consensus based on some kind of new, more dynamic and more heterogeneous form of assessment. We have seen with FTX that having all the credentials from like big academia and so on is not anymore a guarantee. And I think having a history of like positive interactions that went well with other people, having like this very fast moving graph of like people who kind of review each other and so on is going to be an instrument in that emerging reality.
Yeah, for sure. And excited to learn more about that vision, because it's a really important vision, and it's something that as an old school financial services guy who I've always been an investor in technology, but I'm not a technologist. I'm not a coder. I'm not a programmer. I'm not a computer scientist. I've invested in many, many, many of those types of people and leaders who built some amazing businesses. But as someone who's seen this transition unfold, over the course of my career, when I first came in the business, there weren't even computers, and people would keep track of stock prices by hand, and actually had to do math to figure things out, instead of just wake up and see what your neighbor's doing, and just or at a company where you can do copy paste, right? You can copy some other trader's trades because that person happened to do well that day. Again, momentum feeding on momentum, but it can go the other way, which we saw in the bear market.
Yes. And so maybe to conclude, 2 last questions. The first one is, who are the nodes within the World Wide Web that you take as like valid, that you respect opinions from, and that you would ask for opinion before making big decisions about?
No, that's a great question. So one of my favorite nodes, and I don't have as much access to him directly as I would like, but he's very generous with his kind of public views, and his network is so vast, is Tim Draper. I mean, Tim is just an amazing investor. He's a seer, and he's someone I really, really trust on his view of the world. There's a writer that writes a newsletter, Kirill Sokolov, who I really depend on kind of his worldview. He's got a team now. That he used to write it by himself, but now he's got a team, and I really admire what they do. A firm called 13D Research. So that's someplace I look. There are individuals in different sectors that I trust. So if it were something in say the semiconductor space, we've made some investments in the semiconductor area where I feel pretty good that the CEOs there are pretty knowledgeable. So I'd lean on them. If we were talking about the software industry, there are certainly executives in software companies that we've invested in over the years that I would trust. if it was something in healthcare, I have my go-to kind of retail healthcare, kind of health is wealth kind of stuff. And what I love about healthcare is, and it's not perfect because sometimes you can't see what's happening inside, but you can see someone who looks healthy and someone who doesn't. And I love when they post the picture of the ministers of health of so many of the Western countries, and they don't look very healthy to me. Or you look at Bill Gates. I mean, as an amazing person as he is, he don't look healthy, right? I mean, so there's just something about someone who doesn't take care of themselves trying to give me health advice that, whereas when I look at this guy, PD Mangan, give him a shout out. I mean, the guy is everything I aspire to be in my late 60s, and I'm gonna listen to what he says. So I think there are indicators and validators of expertise. If you think about anything, right? If you're seeking coaching, you probably want someone who's really good at what they do, right? If you're getting basketball coaching, you want a good basketball player. If you're football or chess, or if I could get lessons from Gary Kasparov, I'd probably take them. But I probably should give some more thought to a handful of others that I really do depend on kind of day to day as my nodes. Interesting. One of my best nodes is my wife, believe it or not. Not that she or I are experts in very many things, but we have a great dialogue and debate and search of truth kind of relationship that, we just talk a lot about big ideas, and she keeps me kind of grounded. Like, really, that's dumb. Go do more research on that. Or, hey, that's you're onto something there. So that's a good one. So that'd be it.
Cool. Well, thank you so much. On my side, I've been delighted by watching you, online, and I'm very thankful for your time and for having this conversation today. Is there anywhere? So you are very big on Twitter, so I think it's very easy for people.
I'm easy to find. I'm easy to find on Twitter at Mark Yusko. I've done a lot of things in the podcast space, so I'm easy to find. You just Google me. We have a YouTube channel, Around the World with Yusko, where we post content from Morgan Creek, and our website, morgancreekcap.com, has some other links. But I'm pretty easy to find. I have a unique last name, so if you see another one, I guess there's only one other Mark Yusko that I've never been able to find. He's a radio DJ up in Connecticut, so that's probably not me. He has a cool life, and I'm just that boring institutional guy.
Awesome. Thank you so much, Mark.
Nope. Thanks for having me, and look forward to continuing the conversation again.